Good morning, good afternoon, and good evening, friends. In this class, we will discuss about what is sinking fund method of depreciation. I'm in class chapter 5, CA Foundation, and page number 13. So, sinking fund method is one of I'll not say it's a prominent method because prominent method of depreciation is return on value or diminishing balance method. But sinking fund method are used. Um, See, we discussed in the last class what is an annuity method, right? In annuity method, the value of money is appreciated because assuming that if there is it's invested elsewhere, what is the interest that it would have earned, and then that component is also added to the depreciation, so that money is available from the reserve account for replenishing the or replacing the asset, right? Sinking fund method is one step ahead of it. What it does is, in sinking fund method, a sinking fund is created, right? A sinking fund is created and it is invested invested in government securities. The purpose of doing this is the purpose of doing this is like the money will earn interest, the investment will earn interest, and that interest will be reinvested again along with the depreciation, right? So there's a depreciation of 100 rupees, and that is invested into government securities. The government security will earn interest around 10 rupees in the end of the year. So next year, along with the depreciation of the next year, the interest earned on the investment also is invested in the government securities, right? To make it clear, the depreciation value of depreciation is transferred to a fund called sinking fund account, and the money which is created as a provision for depreciation is invested into the government securities, right? So let's say, for example, the first entry for it will be, no, as usual, the normal entry, depreciation account debit, and instead of provision for depreciation or crediting asset account, it will be debited to a sinking fund account. Sinking fund account credit, right? Then depreciation will be transferred to P&L account. This is also normal. P&L account debit to depreciation account credit. This is the second entry that will get processed, right? The third entry, the most important entry here is um, for investment of depreciation in sinking fund, right? So it will go to sinking fund investment account debit and credit to bank account because it is paid through bank account. It's paid through bank. So the money that is created as depreciation, that is money that is available as depreciation, is invested into the government securities as sinking fund investment account, right? Then at the end of the year one end, there will be an interest that will be earned on the sinking fund investment. So bank account debit will get the interest from the bank, right? Interest will get credited to our bank account. So bank account debit and interest on sinking fund investment account. It's a revenue, right? Interest on sinking fund investment account credit. Then this interest on sinking fund investment account, interest on sinking fund investment account debit, and it is transferred to sinking fund account. Yes, you're right, because the sinking fund account will be reinvested in the next year along with the depreciation for the current year, for the next year, right? So sinking fund investment account debit to sink. Next one, this entry will continue year on year, right? When the sale of sinking fund investment is happening at the end of its useful life, like sale of sinking fund investment at the end of its useful life. So obviously, when it is sale, bank account debit, and credit to sinking fund investment account. If the sale proceed is happening at a profit, then sinking fund account debit to sinking fund account. Sinking fund account credit. and the reverse entry in case of a loss, right? Say that profit on sale of sinking fund investment. Reverse entry, reverse the above entry in case of loss. In case of loss. So this is clear, right? So this is more used when when the asset. See why this annuity method and sinking fund sinking fund account comes in place, because it calculates the present value of money. It assumes that present value of money will not be, the current investment will not be sufficient for future investment. The amount that's 100 rupees now will not be the same 100 rupees when we have to reinvest it for 3 years, 4 years, 5 years, when the asset has to be replenished, right? So that is the reason it considers an investment pattern in case of an annuity method, like what has happened if this is invested elsewhere. So that component is added to the depreciation. And in case of sinking fund method, the amount is invested. That is a better practice, right? The amount is invested so that it can earn income also. That interest also will get reinvested, so that the money is available when actually the asset is available for, when actually the asset has to be replaced after its useful life. The next one is like fine, any surplus. Yeah, we'll have this, like there will be surplus after the sale of asset, right? There will be surplus, any surplus on the sinking fund account. Any surplus on the sinking fund account will be transferred to general reserve. And belongs to P&L account. Like in case of surplus, it is sinking fund account debit to general reserve account. General reserve account credit. In case of deficit, it is P&L account debit to sinking fund account. Credit. Hope this is clear, right? So this is pretty much simple way of simple method, but normally is not used because of its inbuilt challenges. Calculation of interest, the amount has to be reinvested, and the asset value cannot be changed, and every year the asset value will not show the right amount, right? Every year the asset value will not show the right amount, it will not show its exact amount in the books. So that is, and the calculation of it for a short term period is very cumbersome. The effort involved is very high in case of calculating it for short term period. So it might be again useful for and long term assets, and so that the amount can be reinvested, etc. That is the reason, one of the reason why this method is not actually in use. Anyway, but we'll have a couple of illustrations to solve, which we will do in the next class. But I just require the students to understand how this works and get the concept clearly understood. Just in case you have any queries on sinking fund method, please reach out to me at babupriya@rediffmail.com and I'll get this clarified. And thank you, friends, and have a great day ahead.